Hi everyone, welcome. Oh my God, a ton of people joined already. I guess I should start this 2 minutes late every time. Um, okay, pleasure to have you guys all here. We'll give everyone a minute to show up. We are still waiting on Heather, so she might pop in. But we got a really great panel for you. Really looking forward to kind of chatting. If you guys want to let us know where you're coming from in the chat, please say hi. Tell us where you're from. If you want to tell us about your portfolio, you can. We'll say hi back maybe. Um, This is being recorded as well, so please, if you have to leave early, that's totally fine. Or if you're, probably looking at emails or doing other work, but you hear something you want to go back to, this will be up on the Wheelhouse YouTube here in a couple minutes, or not a couple minutes. What am I saying? By the end of the week. So we'll share it out, so you'll be able to get access to that. Um, Really excited to see so many people here joining us for our first Revenue Management Roundtable of 2026. Pretty fun. Hi, Shane. Yeah, definitely overrepresenting Spokane today in the Northwest. Hey, Michael. Good to see you. Um,
Up, Shane.
we'll give it one more minute here before we get started. I'm going to send Heather another email just so if she joins late, she knows she's going to pop into a live session. Hopefully she's
Hey,
okay.
Nick.
Hey, everyone. Oh man, lots of people. Lots of people. Okay, well, why don't we get started? We've got about an hour to chat today. So my name is John D. Relay. I'm the head of revenue management education here at Wheelhouse, and welcome to our first revenue management roundtable of 2026. If you haven't been to a revenue management roundtable before, it is a series that we put on every other month, roughly, where we just invite top property managers in the space, revenue managers that are part of property management companies to come and have a conversation about what's going on, right? What demand are we seeing? What strategies are they implementing? And it's a great opportunity to kind of hear what other professional revenue managers are doing and thinking about, and hopefully make those connections. So, really a pleasure to be here today with this great panel. We'll start with some introductions. Quinn, do you want to introduce yourself first?
Hi, Quinn Vollmert. I'm the Director of Revenue at Roofstock. Roofstock was recently one of the Costco franchisee operators that took over three markets, Tampa, Florida, Tampa, St. Pete area, Charleston, South Carolina, and the Central Oregon coast. So about 1,200 homes total that were from the Casa portfolio that we've been launched and stabilized in the past few months.
Awesome. Thank you, Quinn. And Jenna, do you want to introduce yourself?
Yeah, hi everyone. I'm Jenna. I work for Upstay. I'm head of revenue and distribution. So, Upstay is a property management company located in North America. So, we have Orlando is our sort of largest market. We also operate in Austin and Eastern Canada as well. So, I've been working with the company for about 5 years now. I saw a comment from Australia. Hi from those in Australia. I'll represent you over here in North America. Nice to meet you all.
Awesome. Thank you, Jenna. And Doug.
Hey, thanks. Yeah, Doug Truitt. I'm the Senior Director of Channel Optimization for VTrips. We operate roughly around 4,500 properties from Hawaii all the way to the East Coast US, predominantly in the Florida Panhandle, but we're also heavily in Texas, New Mexico, Alabama, as well as the Carolinas, and also some tailor-made up there in Deep Creek.
Awesome. Thank you, Doug. And I know I said it's revenue managers. Doug does have revenue management experience, but
Yeah.
if you've been following these last year, distribution stuff has come up so much that I thought it would be a good kind of addition. And also, maybe this will be a debate a little later, but I do think that distribution and revenue management are very tied. In many cases, your revenue manager is doing distribution. So if you are concerned about a categorical mismatch, I think we've got it covered. Okay, so when Heather joins, if she's able to, we will give her a chance to give a little introduction, but let's just hop in and start talking about what's going on. General structure we do is we talk about a little bit about what's been happening last month. and last quarter. We talk about what's happening now, and we talk about what our expectations for the future are. Since this is the first month of the year, we're going to kind of twist that historical conversation a little bit into how these revenue managers were planning for 2026 in their revenue so that we can tie that to what's going on. Because I'm sure a lot of us have had plenty of conversations about how 2025 ended. So let's start out with this, right? I'll do a little framing. 2025, kind of a tough year for a lot of people in a lot of markets, particularly as we swung into the end of Q3 into Q4. We saw a lot of resistance to occupancy in a lot of different places. A little bit counter to that, though, advanced bookings still seem to be pretty strong across most markets. So a little bit of a mixed signal. We have things not really coming in at the last minute or not really getting to occupancies that we like to see in the months we were in, but advanced booking remained pretty strong across many markets in the United States. So when you guys were looking at how Q4 went, one, how did you evaluate what was kind of happening in your Q4 in your portfolio? And then what were you planning for as a strategy kind of going forward? And Jenna, why don't we start with you?
Yeah, so Q4 was an interesting one because I have a few different markets and they all act a little differently. So Orlando is always the big one when it comes to the holiday season, and we always like to make sure that ADRs are strong. We're covering some of those shoulder dates. We have a lot of group and family travel, and so that was still a really strong year for us, particularly because this year compared to last year, the holiday fell on a Thursday, so instead of the Wednesday midweek. So we did see some better travel, I guess, across sort of that weekend. And January is very much a shoulder, like sort of a low shoulder month for Orlando. And so we always like to pre-prepare, especially also for spring break. So my team always makes sure that they're following their pacing reports really closely, having a look and seeing what's happening in the market, what kind of trends, visas, immigration, any other sort of factors that will come into play with people traveling as well. So we always make sure we prepare really well for low season so that we do have advanced bookings on the calendar, and then we just try and fill up as needed after that demand sort of drops off.
Makes a ton of sense. And Heather did join us. Heather, when I call on you, you can do a little intro too, and I'll let you know what question we're answering. So pleasure to have you here. Jenna, when you were in Q4, one, what kind of strategies were different than what you had done in the past to get Q4 where you wanted? And then when you were kind of thinking forward, what were you planning to do different than what you did in previous years? Like, how do you think the conditions are making you change your behavior?
So I think we're going to probably talk a little bit on this as more distribution and listing visibility. So there's a lot of supply in a lot of the markets that we operate in. And so maintaining visibility is absolutely crucial. And so that was definitely a huge focus for us, was to make sure that as much as we could try and get on that first page for all the search results across the OTAs. So visibility is a strong one, listing content, making sure we are connected to the right channels to make sure we get eyes for the right people. That was a huge one for us compared to the year prior. And I think also encouraging some discounts for early bookers and longer lengths of stay. I know that the booking window is gradually shrinking in a lot of different areas, and so grabbing that demand when it was still there for advanced bookers was important to us as well.
Awesome. Thank you, Jenna. And do you have a few like very specific tips? Because I know we often say like, focus on getting it on the front page, but what do you having your team actually do to achieve that?
Yeah. So we do have a look at sort of the OTAs do provide conversion metrics, and I talk a lot to my account managers about sort of what their benchmarking is when it comes to those type of metrics. There are other programs out there that you can use to look at your search ranking. There are different software that you can compare yourself against your competitors, gives you a ranking as well. So really the most important thing, I guess, is making sure you're on the first page. And so the first page is really to do with your quality, so your rating, your pricing and your promotions have a lot to do with that as well. And just making sure your listing is optimized, so you have all the amenities ticked that you can. I know the OTA is sorry, Jerry. I know the OTAs like you to use all the tools that are available to them as well. And so we make sure that, Airbnb, we use all the tools we can. Booking.com, Verbo, other OTAs. We're ticking all the amenities and using all the tools they have to essentially manipulate ourselves to, get higher in the algorithm.
And kind of last little question, do you have your team manually go capture those conversion metrics, or are you doing anything to pull them in? Because you guys are at scale, right? You have pretty big scale.
Yes. So at the moment, Price Labs do have a new tool out, which we are testing at the moment. But typically, we've used a couple of other softwares, but in other times, we've really just kind of gone in and asked our account managers to put a report together, and that's kind of worked a little bit better for us rather than having to dig into it individually.
Awesome. Um, Perfect. Uh, Quinn, why don't we hop to you and then I'll introduce Heather and we'll finish off with Doug. But Quinn, you know, what did Q4 kind of look like? What were you thinking about? I know you were kind of getting into it, so speak to what you thought was going on, at least in the markets, and how did that affect like what you're planning for?
Yeah, definitely. So, I mean, we were onboarding essentially 1,200 new units because we had to relaunch most of the listing pages. Airbnb was a brand new listing page, and then some of the other ones we were able to migrate some reviews so we could retain some of that quality merchandising. But it was kind of like launching a brand new portfolio at scale into kind of like you said, somewhat softer macro conditions and a little bit unknown. So I think with that in mind, we were cautious. So like we kind of approached 2026 with caution of setting expectations with our team, but also with our owners of just like we're thinking about the long haul here, and the first critical mission is get that quality ranking back on Airbnb. It's the biggest marketplace, most eyes, and for the homes we were able to do that for pretty rapidly, it's already paying dividends. Like we really shrank that kind of launch window to like 30 days in some cases where it's up and performing. That was a huge win, and we actually got the entire portfolio stabilized pretty quickly. Which in Florida, we're coming into spring break now. That was super important. Where was a longer booking window for spring break travel in Florida, but we are picking up the last minute demand as well, which is great to see. And I think a lot of the macro signals that we're looking at are not even necessarily STR specific. Like we're trying to use just a lot of outside the box measurements of the economy, consumer spending, just to sort of forecast the next 6 to 9 months and have an opinion. Like especially as the summer booking window gets closer for Charleston and Oregon for us, we'll want to have a real pretty strong opinion on what direction the consumer is going. So like right now, like our caution has shifted a little bit more to optimism. I think actually are some tailwinds. Like labor market is still a little bit tight. Like labor market's a little bit weak right now, but there seem to be enough tailwinds that we're remaining optimistic, especially for the premium homes. The pattern we noticed like right away off the bat in November, December was that those kind of in between holiday periods, those like lulls between Thanksgiving and Christmas or right before Thanksgiving, we would have expected like very low occupancy, but we actually saw with the right strategy, we were able to pick up kind of that value conscious traveler, later booking window, but still longer stays, high quality guests. And that was kind of a win of like there is this sort of right strategy for some of those lower periods. That's already paid dividends for us in January across all of our markets. And I think continuing to optimize that in the shoulder seasons and then the off season on the tail end of these big peaks is going to be critical.
Yeah, I'd love to just dig into a little bit more of like what you mean by that right strategy. I think that even though last year was tough, we saw that the advanced booking window was really strong. I still think that that's kind of the secret to doing well if things are going to be tough is taking advantage of that early booking window. And, for me, looking at data, price, our market our industry is consistently overpriced outside of a certain point, like as a whole. So I'm just curious what the right strategy meant for you. Like what were you guys implementing and thinking about there to get that going?
Yeah, and that was kind of a day one. This is our philosophy of like this idea of a FAR factor of we should be pricing these big premiums 6, 9, 12 months out. Like I don't really buy into that anymore. I think that the market's getting more efficient. We're competing with hotels now more than we are with other short-term rentals. So really efficient pricing in the very far booking windows, and then the added benefit of that is it's just one less thing for our revenue managers. Like it's a very small team we have. We don't have really the resources to really fine tune all of these different levers. So I've kind of taken the approach of like the FAR factor is soon going to be a thing of the past unless you're looking at the 360-day window. Like if we're booking next spring break, which we're getting a bit of in Florida already, there I think a little bit of premium is healthy and probably like a risk mitigation more than anything for cancellations that come in later. But the 3 to 6 month window, like we're trying to be really sharp on rates, and we're finding that when we're doing that, we're not scrambling for last minute occupancy at these depressed rates anymore. It's actually really accretive to ADR.
Yeah, that makes sense. The right strategy is really like making sure your price is right year round. And I talked a little bit about that with Bart John on his last webinar, which is around the like buy now, pay later stuff. I think those things and cancellation policy trends in the industry really encourage you to have your price correct because more and more your property managers are being pressured to be more flexible for the consumer, and then that means the consumer, like, you can't just charge them and have them be stuck.
Yeah, exactly. And I think when we approach that with our philosophy, we're bringing that to our individual homeowners too, and kind of gauging their sort of risk preference. Like, so if you actually book something really far out at a really high rate, it's actually a high risk booking because, and we've actually sort of caught guests doing this in real time. They'll sort of secure the slot far out, cancel, and then try to rebook something last minute. And I think what we've noticed over the years is just the gamification of the STR industry is going to happen. Consumers are savvy, and if we're trying to be as sort of fair and transparent to consumers while also serving the sort of risk appetite of our owners with regards to cancellation policy and kind of these far up premiums, it really is one of the win-wins in the space where we're able to serve guests and serve our owners much better in that sort of a strategy.
Absolutely. Thank you, Quinn.
Yep.
Heather, why don't you introduce yourself to us? And then what we're talking about is just, what you saw in Q4, those trends that really stuck out to you as being very important, and especially those trends that made you start to plan for different behavior kind of going into 2026.
Sounds good. No, thanks, John. My name's Heather. My company is Richard Logic. We do revenue management, distribution, consulting strategy, revenue management for hire. So we work across many different markets in the US, Canada, Caribbean, Hawaii, and a little bit in Europe. So probably more like Doug, we have just this diverse view of what's happening in different markets. So in Q4, there was one trend I would say that was universally true was that shortened booking window. And one of the things we were most surprised by, it was even with larger homes. Now, I don't disregard everything everyone said about like book early, have rational pricing farther out, and that there is still demand for people who want to book 6 months or more out. But surprisingly, there was more demand than we anticipated that was booking within 30 days, even for larger homes. And that was true in a ski market or in a beach or city center. So, and then I think taking that, I'll just maybe stay on that particular trend into spring. There's a lot of debate we're having around, do you drop rates in March now for spring break? And, you can look at macroeconomic factors to maybe determine who's the audience in that market. Are they going to travel? Is this demand going to come last minute? That shift of Easter. So looking at last year, Easter's pushing more into March. So everyone's kind of taking a different approach, I would say, on that. In some cases, it's, yes, discount more aggressively now, try to get that early booker, even though the booking window may be up and down and it may be a huge spike within 30 days. So do you wait until then? So I think that's just a debate, but something that everyone should be having, right? Like, not just assume anything is going to be like last year.
I think that's great advice. I'm curious if you might dig into a little bit because it is true that there's a lot of markets where that short-term demand is strong. I think the hard part for people is how do you pick the price point in that time period? So how are you advising your partners and clients when they're either applying that strategy or in that situation?
I would say I'll carve out one exception. Ski is the most volatile and the most difficult. So it's like March in ski is like, you know, it's like gambling. I mean, so that I would carve aside. But in all other markets where you don't have such the weather dependency, we're trying to push more for don't just have nothing, at least start layering in some base. Don't wait for it all, like a healthy balance, right? So if you end up doing that and you look at it and you're like, you know what, maybe we left a little money on the table for these few homes, like better that than fire sailing, within 14 days. So trying to find the balance, whereas just kind of all one versus all the other, wait versus, early sale.
Yeah, it's very hard to pick that price point. A lot of it is going to be experience. And I think for the audience, your risk tolerance is a big thing, and that's going to be really different. Like, you can't just take what other people say because, Doug and Quinn's risk tolerance is going to be different than, say, Chip in the chat who has 20 units, right? And you're gonna act different because, if you have to sell 1,000 rooms versus if you have to sell 10, you're gonna act a lot different. Heather, for your clients, how do you judge the risk tolerance of people that you work
So sometimes it's a very hard opinion from an operator and they just know what they want and they're willing to wait. They want to hold that rate high. In other cases, there is ability to be more flexible and um, start to layer in base. And sometimes that leads to them wanting to be proactive to tell an owner, hey, we're going to be lowering rates. You might even start taking rates below last year, but we're behind. You're behind pace. The whole market is too. So we're going to do the strategy, and that can help with eliminate owners going, why did you take this March booking at this low rate, or whatever time frame you're talking about. So I would say those are the conversations we're trying to have, if that is what you're looking for, John, how to navigate that.
Totally. I heard Quinn say something similar when they were saying they were looking at macro data to forecast. He also mentioned, I don't know if you caught it, but they were started telling owners that too. And, I'm a big believer, a lot of revenue management, especially the communication side, is psychology. And it's a lot easier to be optimistic later if you've been conservative at the front. If you're optimistic at the front and then have to be conservative later, that's a lot harder conversation for everyone involved. Um, okay. Awesome, Heather. Thank you. Doug, why don't you tell us a little bit about what's going on, and what you've been seeing and what your kind of focus areas is, or any trends that have stuck out to you that are really fascinating
Yeah,
you.
I think to add what you just said, surprise and delight is a lot better than the other way around, right? I mean, you don't want to sandbag it, but it's better to have those conversations in that order. I think for us, Q4 did start strong, and we did start to see some softening happen. Um, but I think what's the beauty of it is, you talked about it earlier, John, but the partnership between, your advertising, your distribution, your channel management, and your revenue has to be so tight, because when that happened for us, as an example, Rachel, who's a VP of Revenue Marketing at VTrips, she and I talk all the time. And the things that we talked about in that moment were, how can we get more visibility? How can we actually, ramp things up and get our stuff in front of people? Because if you don't show up, you won't book up. And that is so important. So we leveraged our partnerships. For those of you who may know, Verbo launched their promo APIs back in August for a lot of connectivity providers. So Track, which is our PMS, actually got that going basically right at Thanksgiving. And so I activated last minute discounts because our December stay dates was really shortening. And we were really worried about December. And we actually booked up about 15, almost 16% of our December revenue from Verbo's last minute promotions as a channel for us in December stay dates. And we activated that right around Thanksgiving. So, I mean, it was a really short amount of time, but it basically proved that one, we were probably early adopters. So not a whole lot of people capitalizing on the merchandising, but we actually were able to get in front of people and actually give it up. And we did not give out very much discounts too. And we were able to offset those too. Like we didn't just completely do net discounts. We went for the merchandising, the visibility, and get it in front of people. The other byproduct of that too is we saw lower cancellation rates. So I think when people perceive a value is better, you also get more stickiness. So we've been investing a lot into looking at that as a metric too, which we call kind of stickiness of bookings and how they're sitting. I think to Quinn's point said earlier, those high price bookings that are far out booking windows, those are super risky and they have a lot of cancellation opportunity, especially when the OTAs and the entire booking, behavior of consumers is more flexibility and less commitment in so many ways. So I think that's kind of what we saw. I think the other interesting component to talk about with cancellation rates is, booking.com has been notorious for really bad cancellation rates. And I speculate that there's a behavior there where they're empowering users to book multiple properties for the same exact stay dates. And people are holding out until a group decides they want to cancel or not. And then they do it. And what it does is just locks up inventory. And then you have these really high cancellation rates. And I would imagine that on booking.com, you probably have a low ADRs coming in too. But yeah, we finished off the quarter really strong for Q4. And we also, within those promotions for Verbo, we doubled down on the early booking promotions too. And you can set your date ranges. And so we set things for like right at the end of summer. So we actually got some really decent bookings for August, which is, somewhat of a little bit of peak in the beginning, but then also a little bit of soft on the back end. And it was actually nice to actually get that bump. And then also to the point was being talked about, I think that Heather mentioned it, but if you don't, if you're not going to hit revenue for your owners, you better well hit occupancy, because that's going to be the next thing they're going to say. If they don't have revenue, and they're going to look and see my calendar is completely empty. It's like, what are you doing? So there's a sweet spot you have to find within that, and pricing right, I think, is what does it.
Yeah, I really appreciate those tips. I think for the people listening, we're talking to some revenue managers who are very experienced. And there's a kind of like an order of operations here, which is like your pricing, getting your pricing plans right and kind of knowing them is like the first order. But once you feel like the pricing no longer is the solution, it's a triage, it's a response. And so you got to go further up the chain. And that's why already in this call and all last year, if you were listening, a lot of these really advanced revenue managers are really pushing into the distribution side as a longer term solution than just using pricing as a triage, right? I think Emre said it, Emre from Stay in the fall, he was like, we know what the price, like, we're just dropping the price. That can't be the only thing we're going to do, right? One question I did want to ask you about, Doug, because I think you brought up, obviously, tips on the promotions, but that stickiness metric you're developing, can you just tell us a little bit of the details on like what that means, how you're calculating that, what you're doing with it?
Yeah, I think it's been a little bit of a non-talked about subject in the space, and in the hotel space. But when you talk about cancellation rate, it's a really difficult metric to measure. And so you can measure a cancellation, because a cancellation on a reservation will have a cancellation date, but there's also a created date to the reservation component. There's also a check-in or a check-out date to it. So how you decide to measure the percentage of your cancellations is dependent upon how you want to deal with it. So we are looking at it at not only just the creation date of the cancellation compared to the creation date of bookings in that same time frame, but we're also looking at it in terms of like, what's the arrival dates, and then looking at that cancellation percentage as a comparison to the prior year to see how well we're doing at keeping things really sticky. And if we're keeping things really sticky, that means that we're finding a little bit better of a sweet spot in pricing, and we can build the confidence level on that. And as most people should know on the OTAs, cancellations do play a factor into your search rank algorithms. So the less cancellations you have in aggregate of your portfolio, your accounts, or your listings, the better odds you have at going into the higher parts of the search results.
Interesting. So you're looking at the cancellation rates by stay date historically, and now kind of using that as a metric to say, like, if we're seeing a lot of cancellations, it probably means our price is wrong or the market's shifted around us and people are finding a better deal or something like that.
Correct. Correct.
That's
We're also looking at it at its creation date too, because maybe there's an immediate macroeconomic thing that's happening that causes us to look at the velocity of those cancellations based on a creation date. That is something to consider as well.
You heard it from Doug, folks. If you have your own distribution person, you can start inventing really wacky metrics.
I was just going to add to that another thing that I think ties is value for price and that review score, right? So like if when they book, they believe they got a good deal, are you then going to also lead to like the better review? Just those things seem to tie with what you're saying, right? If you can understand it all the way
Yeah.
through.
Especially with relevancy too. That's the other thing that's being talked a lot about lately is, mathematically you can't, like on Airbnb, if you have a property that has been on the program for 3 years and it's got 500 reviews and it's got a 4.6, you're not going to be able to get it to a 4.8 mathematically. So I've actually confirmed with some of our contacts at Airbnb specifically that they're starting to lean into their algorithm to consider more about 5-star reviews and relevancy of the reviews coming in rather than the overall score of the listing. So it's, to your point, Heather, it's important. One, the subcategories with value are great, but also two, you're having your teams and you're partnering with operations to understand how many 5-star reviews you're getting and actually being able to lean into that, because that's a key factor that they all know mathematically they can't get listings to improve up to those super host profiles and stuff like that.
That's interesting. And I think it does tie into, like, on the revenue manager side, you hear kind of like the inverse of that, which is the recency of low reviews should be a direct actionable item for your revenue manager, right? If you see 1, 2, or 3 1-star reviews or 2-star reviews come in the short term, you need to respond to that for a certain amount of period in your price, right? And ideally, what we used to talk about when Doug and I were back at Stay Alfred is we would want to overinflate the value so that we can bury those bad reviews with good reviews, especially before we get into a booking season for a high season, right? Because you don't want to lose the value on your high season. You want to ideally trade your like shoulder and low season for better reviews so that you can maintain your value in the high season.
Yeah, I think one thing I would say just real quick to wrap that up is like a good exercise folks could take is if the current review is being created, because I don't know if people knew this, but on Airbnb, you only have basically 14 days to leave a review after you've gotten a stay, right? Vrbo, you can do it longer unless the host rates you, right? And then you leave it. But if you are looking at those current reviews, they're coming in low, like John's saying, and you can see the subcategory value is low too, that would be an indicator as a revenue manager to look at those stay dates for next year to see if you're overpriced or if you're really high, because they're relevant tied to the stay date of what the person experienced, not just, oh, I forgot and 6 months later left a review. So that would be a tip I would give everybody to think about.
That's a good tip.
Yeah,
All right.
our philosophy around reviews is kind of the quality of the home itself, like the condition, the age, whatever, is not necessarily reflected in the review score. Like a older, maybe not as well equipped, slightly dingy cottage that's sort of near the beach, that should be able to get a 5-star review every single time. If we market it correctly, we're accurate with how we're representing it, and we're kind of aligned of like what the offering is with the guest. And that's something that I've seen go well, and I think there's a little bit of an education piece too, both with owners and guests of like what the kind of what the 5-star ranking system is, because so much still on Airbnb does depend on it. I think some of the other OTAs are a little bit they're a little bit focused on other aspects of the guest experience, but for Airbnb it's still so critical. And we've had good experiences with that so far, and kind of like Doug said, as we ramp up, we want to make sure that we're using this opportunity to really build that base of good 5-star reviews, which so far we've done a very good job at.
Yeah. Jenna, you did bring us up to distribution right off the bat. Do you have some ways you work with your team on managing and responding to reviews across your portfolio?
Yeah, so I do find review responses are so important, especially for those negative ones, because you want to reassure your future booker that those issues have been resolved or providing some sort of explanation as well. So if someone leaves a bad review, I'm going to assume maybe they're not going to come back ever. They're probably not even going to consider any of our properties. And so I'm going to be targeting the next person that wants to book the property. So that's the importance of responding to those reviews for us. But we also take into account their feedback, public and private, just to make sure that we do cater this sort of listing content to the type of home that it is or the area that it is. We do have some homes in Eastern Canada, for example, that are in areas that do experience a higher amount of homelessness. And so we want to make sure that we cater to the people that are looking to book in those areas for the homes and set their expectations. We do get, people can, understand that maybe going into these areas may not be what you're necessarily experiencing at home. And so you do want to make sure that, you are safe. This is what's happening in the area, and you cater your listing content to manage those expectations in advance as well.
That makes sense. So you're not arguing with your owners in the review or with your guests in the reviews.
No. I don't necessarily think arguing is the best way to go about it, because I want, once they leave that review, I'm going to maybe assume that they're not going to come back. And so I want to make sure that any of my future bookings, they understand that, if they, if there was a bed bugs or there was a specific review about no hot water, we can reassure someone that, that issue has been resolved. And so that increases the confidence of future bookers to continue booking.
Yeah, I do hear that quite a lot from folks. I think it's great advice, which is to make sure you express the solution has been solved specifically, right?
Absolutely.
In the review.
Yeah.
And not to be defensive and argue over stuff.
Yeah, exactly.
Perfect. Okay, well, let's shift into what we're seeing now, and we'll kind of tie this to the future. So feel free to kind of talk about it because it is the beginning of the year, right? But what trends are you seeing? What trends did you see through January? Like, what stuck out to you as being important, and how are you planning for the rest of 2026? And are you making any adjustments to your strategy already? And Quinn, why don't we start with you, and we'll go around the horn.
Yeah, we had a surprisingly really strong January in our off-season markets, kind of a continuation of that trend of sort of value-conscious travelers. And I think it gives us more confidence in kind of a shoulder strategy and then into peak season. And we have different markets with different sort of seasonality. Florida and Oregon are really sharp peaks, then it kind of drops off into shoulder to slight off season. Florida's a little bit longer because you get the summer family vacation too. Then Charleston, it's ramping up kind of right now, and then stays pretty busy through October. And we've seen a lot of sort of demand patterns across booking windows that reinforce our slightly more bullish stance on the rest of the year. The demand is there. We think we're towing the line of being, fairly priced, and our premium inventory is priced at a premium level still and still booking. I think just overall, like a lot more healthy signals than I was expecting kind of right now. Like if you look at a trend of just how they measure consumer confidence over the past year, it's kind of been a little bit of a tailspin for a year, and it's just starting to uptick again. Consumers are getting a little more confident. We've seen historically with that metric, though, is that has a pretty lagging effect in terms of STR demand, where like that might not show up for maybe 6 months. It's still like the washout of that is still kind of playing out. So we think we're pretty appropriately positioned for the summer, where summer is going to be really strong across all of our markets. And then, just managing those shoulders continues to be the name of the game. I think this year revenue wise will kind of be won and lost in those shoulder periods where like April, May in Florida, and then kind of, early March, and then October, November in Charleston. Pretty much anything outside of July and August in Oregon, if we can perform well, I think we'll be in really good shape. So I feel encouraged. I feel really, and kind of similar. We were very quickly able to get, we leaned on Airbnb heavily when we were ramping up, because Airbnb just has a large audience. We can get some quick wins. We've seen Vrbo's share of our revenue grow steadily ever since. And I think a lot of the tools they're releasing, their stance with kind of the consumer market is really strong, and we expect that to continue. And I'm just really encouraged with what they're doing and how they're coming to the professional managers like us, and like really with open arms. And that's a nice feeling, because I think we're like really well supported there. And just expect more diversity across channels, and more like competition being brought to the doorstep of Airbnb, where I think they're gonna probably continue to lose a little bit of market share the rest of this year. I think there's a lot of strong players making a stance. And yeah, from there on out, it's just execution. Like, can we take that view now, and can we execute against it? And that's the name of the game.
Awesome. I do want to contextualize that for the audience a little bit, because you mentioned early on you started pretty conservative, you're feeling pretty bullish. Those are tied together, right? Uh, just to give us like a rough idea, when you're saying you're feeling pretty bullish, like how is your pricing right now, is from a strategy perspective, kind of comparing to like where you actualized last year? Like what is the kind of difference? Like are you way above, pushing way above, does that make sense?
In like the 3+ month booking window, we're still pricing, maybe about 15% above where it was last year, and getting booked there, like getting pretty consistently booked there, which is really encouraging. Obviously with the expectation that that's going to come down as the booking window comes in. And I think part of the reason, and this is market by market, in some of our markets there just isn't the last minute demand yet. There probably will be more. And then in some, like in the Oregon coast, it's not really a destination market. It's kind of a local drive to market, like a lot of local traffic. That one seems to be skewing more and more last minute. But the pickup has been there, and at fairly healthy rates. I would say, not like home run rates, and that's the big one where I'm cautious to be too optimistic into the summer. But we're starting to see similar patterns where, like, if we're kind of towing that middle line of pricing above last year, but not like 30% above, we're still getting some solid bookings out there.
Awesome. Thank you, Quinn.
Yeah.
Heather, do you want to tell us a little bit about what you have been seeing in January, and how you're working with your clients going forward into 2026?
One global trend that Quinn mentioned, I'll expand upon, is channel diversification. And a few of the things I'll mention that are leading to this, Verbo, which Doug talked about too, rolling out new levers. So how do you tap into these based on what PMS you have? Airbnb now going to sell hotels. Like, that will be interesting to continue to watch. I've heard maybe rumblings that Marriott may be rolling out some new levers. I'm curious if anyone else has heard that. And then Hopper and that Capital One partnership, and Booking.com, we've seen more in the mix. So what we're finding is, from a portfolio from just 20 homes up to 300, 400 plus homes, everyone seems to be talking about it, or aware, like, we want to do this better. Something else that triggered it was when Airbnb increased their commission. So how do I do more direct? But this seems to be just a trend across the whole industry from what we can see, and people are realizing they need to pay attention to it. Am I on the right channels? Am I using them the right way? And then am I layering all these things properly? And it's getting more complicated. Just the industry in general is getting more complicated related to that.
Yeah, that makes sense. I often say that like technology doesn't make anything easier. It allows us to operate at a higher level of complexity, um, which means there's a lot of opportunity, but it's also difficult. I'm curious, like, from like how are you specifically getting your clients to take advantage of those things that you're hearing, and kind of seeing like what do you advise them to do? And you have different clients at different levels. How do you kind of segment that, right? Like,
Yeah, so we've been trying to track the PMSs rolling out Verbo. So, okay, who has it now? Who has it now? And are they using it? And then how do they incorporate that in? And that's like it has to be individual portfolio conversations. Um, how easy is it for you to get onto other channels if you want to add Hopper? Are you working through a Rentals United or a Booking Pal? Does your PMS have direct connect? So at least engaging on like what do you have access to? How easy is it? We always like to think in terms of, is it low effort, low return? Like, sure, turn on Wednesday if you want. If it's low effort, it's not going to be a high return as of now. But is it a high effort for you to get on that channel and low return? So just trying to understand what makes sense for you based on your tech capability.
Makes sense. Awesome. Thank you, Heather. Jenna, do you want to let us know what you've been seeing in January and how that might be affecting or what strategies you're putting in place as we get deeper into 2026?
Yeah. So definitely I was like Quinn where I was approaching 2026 with a little bit of caution, but I'm a medium risk taker. And so I typically like to look a little more positively. And so I've been pleasantly surprised as well. The the shoulder sort of low season for a lot of our markets has performed a lot better than what I expected them to do. In saying that, like I mentioned previously, we do like to try and prepare in advance and get a good amount of bookings on the calendar just to solidify that base. But Verbo promotions is another one that was mentioned. We've been utilizing that since we use PMS Guesty. So we've been utilizing that for our Verbo promotions. And so I think the next thing is sort of that intentional distribution as well, just making sure we're on the right channels for the right demographic, low effort, like Heather was mentioning as well, for some of those smaller ones. But everything seems to be looking good. Austin was a challenging market for us last year, and it still is challenging sort of in those winter months. But with the convention center sort of closing down for a while, we were unsure how South by Southwest would perform, but it does seem to be quite strong this year, especially with sort of those larger sort of group bookings. And so that's another pleasant surprise that we've been capitalizing on sort of higher ADRs. I think the main thing for us, I think for our Canadian market, is probably more sort of visa and immigration. There's been a clampdown on student visas. Now Canadians can travel to China visa free. Will that be reciprocated in the future? Will we need to be looking at sort of Chinese tourism booming in maybe Eastern Canada, Western Canada, and what channels we want to, maybe look into that we haven't already? So VTrips is obviously a really large one. Do we look at some other larger OTAs in China to try and capitalize on that? So we've definitely been looking at a lot of visa immigration types of effects on tourism as well to prepare for the next few quarters.
Yeah, that's really fascinating. I'm actually surprised international tourism didn't come up for our other panelists yet. It was a big topic last year, and I think maybe we're in the acceptance phase that it's just going to be weaker in the United States markets. But the Chinese tourism is really interesting because I did one of these with Australian markets at the beginning of last year. And the Australian government thought Chinese tourism would be down, and it has remained pretty darn strong all year. And so that's really interesting to me that, I don't know how Americans take advantage of it. Not every market is going to need to, but that's a really fascinating thing to start thinking about and taking advantage of.
Yeah.
And I think it really points to, for you, like, in the revenue manager who has the opportunity to really think about these kind of like other opportunities, like how do you really think forward, not just dealing with the triage. Do you have any other things that you're kind of thinking about that you might want to investigate that might be good avenues for driving revenue, particularly around like Florida and stuff like that?
Yeah, so there's definitely been a rising trend with pet-friendly stays. And so, over 70% of households in the US own a pet. I think that kind of boomed during COVID. And so I've been encouraging a lot of my owners to, try and make themselves a pet-friendly home so we can advertise, get on maybe some other channels, or just advertise that we are sort of pet-friendly so we can sort of cater to a larger demographic. I think also the experience and the value is a huge one as well for people at the moment. And so we're looking into, concierge services that we can offer as a company. And so sort of catering to specific groups, someone's coming for a birthday, do they need help with recommendations for a large group booking? at a restaurant, or do they need sort of catering advice, for companies that will come in and cook for them. So there's like a concierge service, to offer help with those experiences, and to sort of take a little bit of the pressure off trying to organize such a large group, especially in Orlando and Austin. There tend to be quite large groups that kind of come in. And so concierge services are definitely something we're looking to as well, just to enhance the guest experience and keep those quality scores high.
Fascinating. Awesome.
Yeah, in our Florida market, there definitely is the lingering effect of lower Canadian traffic. I think year over year, Canadian tourism was down like 15% in the Gulf Coast of Florida, and it really only impacted our 30 plus night required stays, who would like homes are only permitted for 30 plus nights. Those have been a lot tougher to fill, and we've gotten kind of creative about it. But like pairing that with also trying to ramp up the listings has been the primary pain point. So obviously, like we kind of expect that to renormalize within maybe not next year, but within a couple of years. I think it should renormalize. But then with the bulk of our homes, the domestic travel more than made up for it. It's just kind of this booming area, which is a nice tailwind as well. And I'm sure like Doug probably has seen something somewhat similar, I'd imagine.
Yeah.
Yeah, Doug, let us know what you are seeing in January.
Yeah, one thing I was going to say to Jenna, I don't know if you knew this or not, but VTrips actually has like a reciprocal relationship with Booking.com. So a lot of your listings are possibly already on VTrips, but I know that there is a content delay that happens from them. Like they don't always pull the content when you change it real time, but you can utilize that as leverage if you get into negotiations with VTrips to get a better commission rate when you sign up with them.
Yeah, 100%. Thanks, Doug. Appreciate
that.
Come on here.
For us for January, we started off really, really strong for January. I think kudos to Rachel and the revenue management team on our side because they priced summer really well. And our booking window has grown year over year. It's actually way bigger than 2024 as well in the first couple of weeks of January. It started to stabilize to the 2025, 2024 booking window numbers. But I think what we are seeing, like we're pacing ahead for every month in this year for 2026 right now. And we're actually, we're pacing ahead of not just 2025, but we're also pacing ahead in most of the months of 2024 as well. So we're finding a lot of success in not having ADR our ADRs are relatively flat, if not ahead in some areas. So we're finding success in velocity. And I think from my standpoint of being in revenue management in the past, but also being so heavy in the distribution, I'm so much looking forward to like building strategies to get more exposure that allows revenue managers to lift rates as they see them starting to pick up a velocity. Because if the pickup isn't there and stuff isn't coming in, like, again, back to what you're saying, John, there tends to be, from what Emre said, like there's really like one lever really that revenue managers have in those moments to triage. So, couple of things of success for us that have happened that we're focusing on is I launched our non-refundable discount options on Airbnb. If anybody doesn't know about that, basically you can opt in to the non-refundable discount and you can set a certain amount that you want to discount off the rate. You don't have to build another rate plan or anything, it just takes from your rate you're sending. And when you do that, you actually are getting people, and it only is within 60 days of arrival. So it helps with last minute. So we saw a huge success. So we've seen in Airbnb in the first month for January, we saw a 90% increase year over year in number of bookings. 23% of all those bookings was actually from non-refundables. And that is, again, back to my sticky comment before, that helps with stickiness. You also get to keep all that revenue if somebody cancels. We've seen some cancellations. We've seen about 3% of all those non-refundables cancel. And that actually allows for rebookings to happen, which doubles the margin, makes things great for your homeowner. So that's been a huge success. We've invested heavily into Expedia's packaging element. If people don't know about that, that is basically when you do Expedia Traveler Preference with Expedia and allow like the Expedia Collect model where they give you a virtual credit card for the payment. You then get opted into the packaging path if you want to add a little packaging promotion, which means people who are looking for flights plus hotel plus rental car. So the misconception a lot about that program has been that it's like, oh, it's for Hawaii, it's for a lot of like long length of stay places. But we've actually found in some shorter length of stay markets like Texas and the Carolinas, even in Florida, there's definitely some packaging going on that we've actually seen some success. We've actually seen 30% of our total growth in January bookings was actually due to packaging just for Expedia. And then again, on the Verbo stuff, like the promotions, tweaking those, making sure you're fine tuning and figuring out a sweet spot with those promotions. We've seen a huge success in those bookings as well. So pricing right, far out, making sure that you're actually getting merchandising and visibility, I think is really the win. And I think the other part for me on this, I'm really big on this. I don't know for other folks on here. I know Heather was there and John was there, but at DARM, the guy from AI, OpenAI, ChatGPT, he was the go-to-market guy for ChatGPT, talked about how basically there's going to be a new level of the internet at some day. And that's because these AI bots or these agents are doing some of that preliminary search for people rather than people going to an OTA or a direct site. And relevancy of ending up in that is changing how the booking behavior is happening. So it's not so much about people ending up in search results anymore as it is people going to direct listings and being relevant in those searches, I think are changing things. And the OTAs are changing how their behavior is too, where they're allowing people to put in prompts that dictate the results they get. So there's a lot of, to Heather's point, there's a lot of complexity and things going on. And to your point too, John, like it does make things a lot more confusing and harder to optimize and figure out. But it is exciting to think that there is another path that can be done, which isn't just, hey, throw a bunch of money at PPC and get it there and be on the OTAs and get it. It's like now there's another thing. So
Can I ask do you a question, Doug or John? Is that okay
yeah,
if I?
yeah, of course.
So one of the things that hotels have done forever, and I'm curious to see if this starts to be more possible in VR, is like travel ads or the paid media spend that Booking.com offers as well. And like curious if you've like tried to test it, just a
it
point of view
sucks.
on that. Because that's another like area that I haven't really seen take off yet.
Yeah, I personally I've tried the Expedia travel ads on a few different with a few different companies I work for with different inventory styles. Like at Stay Alfred, we did it. We've done it a little bit at VTrips, and it never works on that part. And that's because the Expedia travel ads piece is a pay-per-click model, and so you pay for every click. It doesn't matter. But there's stuff coming that I know of. I can't really share with other
Oh,
channels that is
okay.
going to be better on that, where you're not going to pay for every click, but you pay for a booking.
Yeah,
So
or you increase your commission, these
yeah,
types of models where it is more pay to play. So you believe that
yes,
is coming, more of that is coming. Yeah. Okay.
yes, it is.
Yeah.
Yeah, I would really love to see the particularly Booking.com allow vacation rental companies to have more like brand listings where like it's kind of like a sub level where you can hit the brand and see other stuff because one of the biggest weaknesses on these hotel sites is we have really distributed inventory.
Mm-hmm.
And so that's where what Heather said, that investment versus the payoff can get really mismatched. And I think there's a big opportunity for OTAs to find ways to like collect up units. Maybe it's not the full brand, maybe it's by location, kind of like virtual resorts, and say like, hey, these are actually all properties by the same company in the same area. I think that's a huge opportunity for distribution, but they don't talk to me, so I don't know. Doug, tell them.
Well,
You talk to them all the time.
I do. No, I was actually going to say Heather and I, we were at the Airbnb host summit in San Francisco, and they actually talked about that they are building a way to do that on Airbnb. So when you have a brand, now they're gonna ramp up the ability for you as a host to say, well, we've got all these other brands and how the tree actually works up. If people know on like Guesty, there's the HQ model, it's basically kind of like that, but you actually get a way to market the brands within the listings that are relevant to the aggregate of that, not just the individual listing. So it's coming. I mean, Airbnb is working on it. They're trying to do it. I think it's a matter of time. Some of the others are going to do it too.
Awesome. Well, we are at time. I appreciate everyone coming and listening to us. We've had a really great attendance. So we will be doing this again in about 2 months with some new folks. We'll talk a little bit about how spring and spring break was going. Big thank you to all the panelists. This was a great conversation. Really appreciate you guys having you guys participate and look forward to having you back again. And just as a little reminder, we will have this up on the Wheelhouse YouTube where you can share it with your friends, watch it again, and also watch any of the previous ones. They are all up there. So thank you for your time today, guys, and have a great one.
Good to see y'all. Thanks, Jen.
Thank you.
Thanks,
Bye.
guys.